Isa binti Ali and I am the first presenter. Generally, the goal of criminal acts is to generate profit for those who carries out the crime, and money laundering is one of the most prominent crime. Money laundering is a financial crime that is linked to underground economy and refer to the process of legalizing illegal money without revealing the resources. This crime occasionally involve a large amount of money from illegal resources. The first stage of money laundering is the placement stage. Placement stage usually have two purposes, which is relieve the criminal of holding and guarding large amount of cash and place the money into legitimate financial system. After placement stage passed successfully, money launderer will move to the second stage, which is known as layering stage. In this stage, money launderers will convert or move the money to distance them from their resources, and this can be done by various methods. The last stage of money laundering is known as integration stage, where the money will be returned to the criminals through legitimate sources. After the whole process, the money are fully merged into the financial system and money launderer will be able to use them for any purposes. Now we'll look at why is there an issue of money laundering. The most significant reason why money laundering occurs is that the increase of profit that the money launderer can gain. The higher income in future influence the launderer to get involved in money laundering. Next is inadequate financial regulations. Inadequacy in the financial regulation will motivate the launderers to keep do wrong. The third reason is the lack of transparency in organization. On the condition when organization fail to promote the culture of transparency and accountability in the employees, it will potentially encourage criminal activities among the employees. Apart from that, inadequate monitoring system also may cause money laundering to be occur. When there is low risk to be caught, employees will be more likely to do crime. There are also tax evasion that motivate an individuals to commit money laundering. Tax evasion is the action where people illegally avoid tax payment by cover up their assets and the source of their income. Tax evaders will do money laundering to avoid the authorities or top management discover their hidden assets and earnings.
Good morning, everyone. My name is Romina Ana Ujai, and now I will proceed with the next part of our presentation. Auditing is related to money laundering by serving as an essential purpose in verifying and giving credibility to the financial information provided by management of a company. In audit, the auditor is not specifically required to look for money laundering, but to report when they have reasonable grounds to suspect money laundering. The requirements do rather entail a responsibility to follow up on suspicious transactions that are found within the scope of an audit. The materiality concept used in audit is not applicable in the context money laundering. Therefore, the auditor has to take into account that a transaction of any size can be the subject of money laundering. Besides that, the auditors are impartially aware of what they are required to do in the matter of reporting and searching for money laundering. Auditors should have an awareness of the current regulations on money laundering, as auditors do not have to actively search for money laundering activities when performing an audit. As claimed by Zygmunt in 2008, authorities expected the audit profession to take responsibility and search for such activities when performing an audit. Furthermore, internal auditors act as a third line of defense in anti-money laundering activity. With a clear understanding of its role and responsibilities as a third line of defense, internal audit is positioned to design and perform a comprehensive anti-money laundering technology audit. Internal auditor will review the validation and tuning processes to ensure that an appropriate methodology and approach are executed in accordance with requirements. For instance, internal auditor will review IT processes in ongoing data security and reconciliation checks, change management, security, backup and recovery, and configurable controls in system overrides and workflows.
A very wonderful day I bid to all. My name is Iza Atira binti Norman. Now I will proceed with the auditor roles in preventing money laundering. As we all know, the role of auditors is vital in the elimination of money laundering. One of internal auditors' role in preventing money laundering is by establishing a formal anti-money laundering policy. According to anti-money laundering policy, the internal auditors must do the record keeping and recognize any suspicious transaction. The internal auditors need to keep the record of clients for the next 5 years at the end of an audit engagement. Moreover, any suspicious transaction need to be reported to the Money Laundering Reporting Officer MLRO. This speedy action might stop the transaction from happening. Next, the internal auditors need to oversee and monitoring the company operation. In order to avoid emergence of money laundering activities, the internal auditors need to act as a policeman to keep up with each activity. By analyzing the company operation, the internal auditors will have little difficulties finding a proof of the money laundering activities. Furthermore, the internal auditors need to report the detected financial crimes to the audit committee. After discussing among the committee, they can proceed with the report to judicial authorities. For instance, according to Anti-Money Laundering Act 2001, the person that commits money laundering will commit an offence and shall on conviction be liable to a fine not exceeding 5 million ringgit or imprisonment for a term not exceeding 5 years or both.
My name is Nurizatul Azira binti Nasser, and I'm going to present about initiatives taken by Malaysia to curb money laundering. According to Ms. Kuait Swilin, the director of the Financial Intelligence Unit at Bank Negara Malaysia, there are several measures has been put in to prevent money laundering. The first measure is the National Coordination Committee to counter money laundering. This committee's goal is to develop and ensure the proper implementation of anti-money laundering and the anti-terrorism financing measures based on internationally accepted norms. The second measure is the Anti-Money Laundering Act 2001. The AMLA covers money laundering offences generally, which also includes investigating, freezing, seizing and forfeiting the proceeds of significant crimes as well as reporting suspicious transactions, keeping records and creating the FIU. The third measure is due diligence requirements. Additionally, Malaysia has due diligence or banker negligence regulations that hold specific bankers accountable if their institutions engage in money laundering. According to the AMLA, it is illegal to conceal any suspicious transactions from BNM, and those found guilty face fines of up to 100,000 ringgit Malaysia or jail terms of up to 6 months or both. The fourth measure is the NGOs. Malaysia has regulations that control non-profit organizations and charities. The registrar will notify the Financial Intelligence Unit of any activity that he finds questionable and report it to them. And the last measure is the Securities Commission. SC has indicated on its website that it will continue to collaborate closely with other authorities to uphold corporate responsibility, honesty and market transparency. This adds the SC to the list of organizations attempting to stop money laundering.
Hi, my name is Dani Shukri Bintonuddin. So next, I will explain challenges in curbing money laundering.
So there are 4 challenges in curbing money laundering. The first one is digitalizations of product and more complex payment stream. Keeping up with ongoing innovation and new product in financial services is a big problem for financial institutions. Historically, there has been a large dependence on lengthy manual process that result in extremely high rates of false positive alarms, rendering the detections of financial crime risk ineffective and wasteful. Next, increasingly sophisticated criminal and their network. Criminals have ramped up their technique to more sophisticated ways as financial institutions aim to increase their use of innovative technologies. Every day, new AML concerns emerge as a result of increasing digitalizations. Financial criminal profits from this development and become smarter, more professional, and more coordinated. Criminals operate across complicated networks, taking advantages of low institutional process such as banking, capital market, and trade finance. For example, the challenge in curbing money laundering is global regulations increasing pressure on AML compliance expectations. Over the last several years, the worldwide AML compliance environment has altered dramatically, with increased level of legislations being enacted across countries to boost the battle against money laundering, drug trafficking, terrorist funding, and other financial crime. As a result, the fine applied when compliance violations are discovered continue to get increasingly rigorous. Last but not least, challenge in expanding volume of data. Another significant challenge for financial institution is the volume and breadth of data. According to the IDC, there will be more than 175 zettabytes, that is 175 trillion gigabytes of data by 2025. However, as the amount of available data grows, some financial institutions are still unable to realize its actual potential.
My name is Christine Jopin, and today I will be presenting about the impact of money laundering to the economy, society and business. As money laundering occurs both in major markets and emerging markets, its effect will depend on the nation's economic stability, as money laundering reduce tax revenue and reduce the efficiency of a business tax sector. The emerging markets will face a more huge loss because of money laundering. The increase in costs to curb money laundering will decrease the amount of budget allocated for the people's use in the country. This will negatively affect the citizens of a country. Sometimes money laundering occurs without the business knowing of the activity that's going on in the business. So every businesses should be aware of their customers' red flag. However, some might find it hard to keep up with the ever-changing regulation for anti-money laundering policies. As a conclusion, there is a need for constant update in the regulations set up by the government to make sure that money launderers are caught and not being let loose doing whatever they want to the economy of the country and also affecting the citizens and businesses of the country indirectly.